take a look at the handover coming in from the Wall Street, then when you take a look at the Fed, of course, they kept the federal funds rate at a range of 4.25% to 4.5%. That was in a widely anticipated move, so nothing out of the realm of possibilities that we were thinking of previously. So it is a widely anticipated move that we've had come in. But when you take a look at the markets, of course, you do have them regaining some footing. That is something that you're looking at after we've seen the kind of sell-off that has been going on since February, in fact. So when you take a look at the Dow, currently in the last session, you did have that jumping 0.9% for the Dow. S&P 500 as well surged just over 1%. So that's the kind of move that you're looking at as far as S&P 500 as well as concerned. Even the Nasdaq Composite, that's the one that's gained 1.4% but remains in correction. That is, the index is still more than 10% off its high as well. So that's the kind of wrap up that you're looking at in terms of the markets. The S&P 500, which briefly also slipped into correction territory last week, is now more than 7% off its record high as well. So that's something that you have as far as the handover is concerned for both of these indices. Now, the broad market index also on pace to break a 4-week losing streak. Largely, that's the kind of handover that you're looking at. But Kanishka, tell us a little more about oil prices as well in terms of the handover that we have, because quite the steady move coming in as far as oil prices are concerned.
That's correct. Here's a quick commodity check. Oil prices held steady Wednesday as the Federal Reserve sees heightened economic uncertainty. The Fed held interest rates steady as expected, though it did indicate that cuts are likely coming later this year. But the central bank noted in a post-meeting statement that is, the uncertainty around economic outlook has increased. Brent crude futures rose less than 0.5% to close at $70.78 a barrel. US West Texas Intermediate crude also gained about 0.3% to settle at $67 a barrel. Crude futures, though positive through the day, is slightly in the wake of Fed's decision. Traders are worried that President Trump's tariffs could slow economic growth and hit oil demand. In fact, US crude stocks rose by 1.7 million barrels to 437 million barrels last week. This is higher than the 512,000 barrel rise analysts had expected. However, distillate inventories, which include diesel and heating oil, fell by 2.8 million barrels last week to 114 million barrels, versus the expectations for a 3 lakh barrel drop. Now, oil prices eased about 1% in the previous session after Russia agreed to US President Donald Trump's proposal that Moscow and Kyiv temporarily stop attacking each other's energy infra, a move that analysts say increases the chances for peace and could eventually pave the way for Russian oil to enter global markets. The prospect of a full ceasefire remained uncertain, though. Russia and Ukraine accused each other on Wednesday of violating a new agreement to refrain from attacks on energy targets just hours after it was agreed by Trump and Russian President Putin, but the prisoner swap went ahead. Moving on, in terms of the bullion, gold prices edged higher to hover near the all-time highs after the Fed stayed put on the rates as widely expected. Now, spot gold was up 0.2% at $3,039 per ounce after hitting an all-time high of $3,045 earlier in the session. The US gold futures settled mostly unchanged at $3,041. Gold, traditionally viewed as a safe haven investment during times of inflation or economic volatility, has climbed over 15% so far this year. Remember, gold becomes more attractive when interest rates are low, as it is a non-yielding asset.
If you like this video, then like, share and subscribe to ET Now.